Hello, everyone, and welcome to the new episode of the DEA Tech Tuesday, where we discuss technology and innovation related to digital money. If you like this format, please like and share it with your network and make sure to subscribe to our channel to receive our content. I'd like to start by thanking our supporting members and saying that at the end of this episode, you have time for questions from the audience. And of course, you can use the chat of the YouTube to pose your questions. So today, I'm pleased and honored to have Maximilian Maischein, Senior Expert Digital Currencies at DZ Bank, and Roberto Pagliari, Senior Product Owner, DRT Innovation at Commerzbank. So thank you so much for being here. So our topic today is commercial bank money tokens, and our guests will present the results of their technical PoCs from early this year. Then we will discuss the technical implementation, the trade-offs they made, and what they learned along the way. So with no further ado, I'd like to hand over to you, Max and Roberto.
Hello, good afternoon, everybody, and a special thank you to the Digital Euro Association for inviting us to come and talk about the commercial bank money token. I'm going to take you through a small deck, and then I'll hand over to Max, where we will watch a couple of demos, and then Max will dive a little bit more into technical details. So I'm going to give you some background about what CBMT, what it is, and why we're doing it. So I'm just going to share a quick slide deck now. Bear with me just a moment. Okay, so commercial bank money token. A bit of background of why we want to explore this particularly interesting and exciting new project. So within the money landscape, which is evolving rapidly, as we know, with cryptocurrencies and other forms of payment, where do we see, or where do we place the commercial bank money token? So on the left, we have public forms of money, of course, which we're all aware of. We have the retail cash, physical banknotes in our pockets. We also have wholesale cash, which is the money that's exclusive to the banking industry for exchange and settlement between banks who have deposits at the central bank. In terms of the new forms of money around the public sector, we have the retail CBDC, which is touted to be a digital form of cash. It could sit in your own wallet. And then, of course, on the wholesale side, a similar form of wholesale digital money, which could be exchanged between financial institutions. That's the preserve of the banking world. Within the private area, of course, we have e-money and we have commercial bank money. So commercial bank money is the money, of course, that banks lend into the economy. At the moment, we, of course, have traditional deposits, and then we have this idea of tokenized deposits. And this is where the CBMT sits. It is a new form, a new technical form of an existing form of money. So it is simply a digital version of deposits that sit within the commercial banks. Now, there are various forms of this, which I'll get onto in a moment, but just to finish off the slide, of course, there's electronic money. So we have traditional e-money, and then we have the tokenized e-money and stroke stable coins, which have also come into the market. And we'll talk a little bit about what the difference is between stablecoin and tokenized money. And then, of course, we've got cryptocurrencies. Just coming back a little bit to the commercial bank money and where CBMT sits. So, as I mentioned, it's simply a new extension, a new technical form of an existing type of money. There are different forms in the sense that you can have a tokenized deposit, such as a JPM coin, or which is a kind, you could frame it as a kind of tokenized deposit, or like a Citibank token, which can only be used if within the walled garden of those institutions. So they're not fungible across institutions. The CBMT is particularly unique in the sense that it aims to be a multi-bank tokenized deposit, and that is and just to again come back to the idea of a bearer non-bearer instrument, is a non-bearer instrument as opposed to stablecoin, which is a bearer instrument. Yeah, so it's an instrument that will be used for cash settlement that is an extension of traditional deposits. Moving on to why we want to create this. So we see from industry a demand for this new form of money. So industry is now starting to establish itself in new ecosystems based on digital ledger technology. And certainly there's a lot of exploration in this area, and we're seeing new business models such as pay-per-use, machine-to-machine payments. And within these DLT ecosystems, it's really necessary to have a suitable form of settlement. And at the moment, today's forms of money are not suitable. So they're not available in smart contracts. In terms of real-time payments, it's not really there. Micro payments and high precision payments are very difficult to conduct. The ability to do atomic settlements, so whether it's DVP or PVP, is difficult at the moment. And of course, in the world of cross-border payments, these can be quite slow and also quite costly. So what does the commercial bank money token give us? So it is a claim of existing of customers against bank deposits. So it's, as I mentioned in the previous slide, it is simply an extension of existing deposits. It's fungible, like commercial bank money. So we aim that the mechanism for transfer between the banks allows us to transfer that money and make it effectively fungible. And it's directly exchangeable into commercial bank money. So that one of the key benefits clearly is that I don't need to, it's cash one for one. It's sitting in my bank account. It sits within the existing regulations. It will adopt existing reporting mechanisms, so that there's not much in terms of uplift for a customer to start using a tokenized deposit, as opposed to stablecoin, perhaps, where now there's potentially new risks to look at. There's new systems to embed, and there's a need to always understand what's behind the stablecoin, with the risk that there's a departure from its par value. Okay, so what is CBMT? So a little bit maybe of repetition, but as I mentioned, it's covered by existing regulations. So we don't expect that we need new regulations for this. This is still under discussion with the authorities, but so far the discussions have been quite positive. It's less complex than existing payment rails, so we don't have this friction between business processes and payments. If we're in the if you have a DLT system and then you have the payment leg also within the same DLT system, then clearly that creates a lot less friction, becomes more of a seamless setup. Again, there's no need for separate risk management or additional risk management like you might have with a stablecoin. You can choose a wallet provider according to your needs. Of course, it's guaranteed exchange into deposits on a traditional bank account at any time. There's a possibility for participants to have their own DLT framework. So one of the key topics here is that we will make this commercial bank money token available onto the DLT systems of the enterprise ecosystems. We can implement atomic settlement, so we remove settlement risks. It's an unlimited store of value. That's what we would expect. We will deliver 24/7 real-time payments around 365, and of course another thing is the possibility to program transactions into the smart contracts. So in essence, that's what CBMT is. We're very excited about this project, and we have been conducting a number of experiments. But actually, before I go into that, just to again reiterate or like show it in a slightly different way of what we're trying to do. At the moment, business is generally conducted. If it's conducted on DLT, there's a separation at the moment where the payment process requires an interface with legacy systems and legacy rails, and that creates delayed payments. As you have the system break by embedding the payment onto the same DLT, you remove that friction. and you can combine the business process with the transaction, and that's absolutely key, and that's one of the key benefits that we deliver. So what did we do? We conducted a proof of concept in the last few months. We did this across 3 different systems. Here we're going to talk about 2 of them. One is R3, where we conducted a number of what we call pure money use cases, and then we did some more advanced use cases on a couple of other systems, one of which is European Public Network, which we will be demonstrating today. So in terms of the pure money use cases, these were relatively straightforward. So we had one case where it was one bank with 2 separate customers, and they exchanged tokens of the same bank. And then, of course, there was a second pure money use case where we had 2 different banks, 2 different customers banking with those different banks, who were able to exchange tokens between each other. And then the system performed an orchestration of the transfer. Ultimately, you'll see it in the demo, but basically the customers will receive their bank tokens, and in the back, the banks clear the liabilities between each other via traditional rails, or in the future, that could be new rails such as CBDC. And then we looked at more advanced use cases. We looked at working capital optimization, where we had smart contracts that allowed us to receive payment based on certain triggers. A cross-currency use case, and of course streaming money, where we simulated the product coming off a production line and certain payments happening after an amount of product had been produced, which was also quite interesting. You can see these on our webinar. You can see all 3 cases on the webinar, which is published on the BDI website. We can provide that after. Okay, so I think we're going to go into the demos. I'm going to stop sharing here. And if Tamara, if you could launch the demos, that would be perfect. So the first demo we're going to see is R3.
I'm Roberto from Commerzbank. I'm going to demonstrate a pure money transfer on the Quarter platform from R3. R3 is a leading provider of DLT software and services that enable secure exchange of value in regulated industries where trust is critical. Within the digital currencies landscape, R3 and Quarter is one of the leading technology providers to central banks and commercial banks for digital currency solutions. Access to the test system was through a web interface that you will see shortly. In production, banks and corporates can opt to connect directly via the Quarter protocol, develop their own automated workflows and multi-party interactions based on smart contracts. As a basis for this proof of concept, R3 leverages its existing digital currency sandbox, which models the commercial bank money token, CBMT, using a UTXO standard. This implementation, together with the privacy model of Quarter, shares transaction data only on a need-to-know basis. Each issuer of a CBMT defines a partition of the network where this token can be moved. The multi-issuer capability is implemented by burning the CBMT of one issuer and minting the CBMT of the other issuer whenever a cross-issuer transaction occurs. Settlement between the banks is simulated on an automated gross basis. Now I will move to the demo described here, where we will conduct a simple transfer between 2 different corporates who operate deposit accounts at 2 different banks. This particular use case demonstrates a core element of CBMT, which is the transfer of a liability of one bank and conversion into the liability of another bank. What you see here is the user interface and the dashboard of a corporate customer, in this case Evonik Industries. And we can see in the page that there is currently no CBMT in Evonik's wallet. Similarly, the other corporate, Siemens, also has no CBMT in their wallet. In both cases, the corporates are pre-configured to exchange CBMT from Commerzbank or Deutsche Bank. The first thing we will do is request CBMT. This simulates the conversion of a traditional deposit into a tokenized deposit. Once tokens are minted, the tokens, representing a liability of Commerzbank in this case, can be transferred to the recipient. What we will do now is we will request Commerzbank money token. requesting Commerzbank Euro CBMT, and we're going to request 50,000. At this point, a request has been sent to Commerzbank where they need to approve the minting of the CBMT. So we'll navigate to the Commerzbank dashboard. At this point, a request should have been received by Commerzbank. Approve. Successfully approved and issued. If we go back to Evonik's dashboard, we should see that 50,000 Commerzbank Euro CBMT has indeed been minted into their wallet. Now what we can do is transfer the CBMT to Siemens. So let's enter a transfer request to Siemens. Let's transfer 20,000. Transfer. So as we can see, the Euro CBMT has dropped to 30,000 in the Evonik wallet. Now if we navigate to Siemens, we can see that they have received 20,000 Deutsche Bank Euro commercial bank money token. So what's happened in the background is that the system has sent Commerzbank token to the wallet of the recipient, and a conversion has taken place where the recipient is given Deutsche Bank token. The balance of Commerzbank liabilities now residing with Deutsche Bank will be net settled or gross settled via real-time gross settlement rails, or of course in the future via any digital wholesale settlement instrument, such as a wholesale CBDC. To conclude the demo, we will redeem the 20,000 Deutsche Bank Euro CBMT. Deutsche Bank Euro CBMT will redeem the full amount. And now Siemens wallet is empty. And that effectively simulates the conversion of tokenized deposit back into traditional deposit. That concludes the demo.
Okay, and now we're going to see the demo on the EPN, European Public Network.
I'm Max Maischein from DZ Bank, and this is the CBMT proof of concept on EPN. The business use case is currency exchange. The name is EPN because we implemented it on the European Public Network. What is the European Public Network? It's a non-profit located in southern Germany, and they run a public permissioned network based on Ethereum technology and also some additional services like IPFS and a wallet. What does CBMT look like in the EPN case? We choose an implementation based on the ERC 1155 standard. This had the great advantage that we could leverage existing applications like, for example, the third-party wallet Helix ID, and we could also leverage existing developer knowledge. What you will see is a web frontend and JavaScript SDK, but we expect CBMT to be mostly automated payments. The use case looks like this. We have customer A who wants to pay customer B, and customer B banks with a different bank. Their contract is for payment in US dollar, but B wants to receive euro. Customer B configures their address to convert the currency, and customer A does not need to know anything about this. Bank B does the currency exchange in the background. Technically, the change has to happen from currency US dollar to currency euro, and also from issuer Bank A to issuer Bank B. Now, let's look at how this looks in practice. We have here the Helix ID web wallet, which we will use as a front end. On the left side, we have customer A. They have 200,000 euro in total with DZ Bank and UniCredit, and 55,000 US dollar with DZ Bank. And on the right side, we have customer B, who holds 51,700 euro with UniCredit. And on the more technical side, under the hood, this looks like this. We have on the left side, the interesting part, 45,000 US dollar in token ID 201, which is US dollar held with DZ Bank. And on the right side, we have 51,700 euro in token ID 100, which is euro held with UniCredit. And now we do the transfer. We enter the target address and we want to send US dollar from DZ Bank, and we send 5,000 US dollar with 6 added digits of precision. And this gets sent. And if we now refresh on the left side, we see we have only 40,000 US dollar now with DZ Bank. And on the right side, customer B now holds 56,400 euro with UniCredit. And again, a look under the hood, how this looks to a machine. The account of customer A in token ID 201 has decreased to 40,000, and the account of customer B in token ID 100 has increased to 56,400. And this concludes the
Okay, great. So now I'm going to hand over to Max, and I will share the next slides. Thank you.
Yeah, thank you, Roberto. So I'm going to tell you a bit about how the EPN smart contracts look internally, what data structures we use, etc. EPN runs on the Ethereum virtual machine, and it's a public permissioned network. So that means all participants need to be KYC'd and whitelisted there, which is important to us. And we implemented there 2 smart contracts in Solidity. One smart contract which does the basic token representation, and you could call it the account database. We use the ERC 1155 standard there. And this smart contract implements the money transfer between accounts and emits the appropriate events whenever conversion is needed, etc. And then there is a second smart contract which handles all the token administration, like whitelisting new banks, whitelisting customers by banks, and also the registration of conversion addresses and configuration of conversion addresses by the customer. So the token administration contract is also used by everybody, but the different functions of the token administration contract are only available to the appropriate parties. So only the central entity can whitelist new banks, and each bank can then whitelist its customers for CBMT, etc. And then on the next slide, a bit on the code basis, we started with the 1155 implementation by Open Zeppelin and extended it to also do the interbank clearing. That is, if or at the end of a transfer, one bank will hold tokens of another bank. And to clear that and then settle that, we needed a little bit of extension of the 1155 contract. And we model the different issuers, that is, the different banks, in the token ID of the 1155, together with the different currencies as well. And we encoded the currencies as the last two digits of the token ID, and all the different banks as everything before that. So, for example, we have Commerzbank has the token ID 100 for Commerzbank, and Euro is currency number 0. So 100 plus 0 results in token ID 100. And if we look at DZ Bank, which has the basis of 200, DZ Bank Euro is then encoded as token ID 200, and US dollar gets currency number 1. So US dollar held with DZ Bank would be represented as token ID 201. So this allows us to stay within the framework that ELC 1155 gives us, and still model different issuers, different banks with different currencies, and model all the holdings in there. There is a small drawback because we only use 2 digits for modeling the currencies. We can only ever have 100 different currencies in the system. So at least for the proof of concept, this was fair enough because we only implemented the 2 currencies, Euro and US dollar, or we only used these. So that worked out so far. And we certainly can have more than 10 banks, or we envision that. So that was one of the drawbacks or compromises we took to model just 100 currencies. But we will see how that works out. Then this was all implemented in the 1155 smart contract, and all the administration stuff goes into that other custom smart contract. This holds the data on the banks and all the wallet addresses of the banks. We have different addresses for minting new token and issuing new tokens, and also redeeming tokens for traditional deposits. And that contract also maintains the relationships, which customer belongs to which bank or to which banks, and also keeps track of the configuration of the customer addresses and which wallet addresses all belong to the different customers. It also implements some core functionality for central administration of the CBMT. Like, for example, we can freeze certain token IDs from transferring. This is mostly intended for the authorities so that they can stop certain token IDs from being transferred. And of course, it's also used to add new banks to the system or remove existing banks from the system. The banks also have their own corner of functionality there to add new customers with whom they have contracts to the system, and also manage what currency each customer wants to hold, or if the customer doesn't want to hold a specific currency, how the conversion should take place there. And yeah, each customer can register on their own new wallet addresses under their name. This is intended, yeah, mostly for setting up conversion rules and also for connecting new machines without necessarily involving a bank in the operative business of setting up a new machine, etc. And I believe that right. The main interesting thing, at least for banks, if customers of different banks transfer CBMT among each other, this means that the money must also change hands in the traditional system to settle the difference between the banks. And first we do a clearing step. That means if Commerzbank holds 50,000 tokens of DZ Bank in euro and DZ Bank holds, say, 30,000 tokens in euro of Commerzbank, we can net that difference on the DLT and then settle the remaining difference of 20,000 euro between DZ Bank and Commerzbank using the traditional money transfer rails. So we do as much as possible, obviously, on-chain, and then fall back for the remaining money to the traditional payment rails. And also the foreign exchange operations, like, if a customer pays in US dollar, like in the example, but the receiving party wants to receive euro, this is also done, also implemented in the smart contract. We envision that there will be at least currency sponsors if the bank doesn't do it for themselves, so that you can always exchange between different currencies. Ideally, obviously, every bank does the exchange, but for some currency, we imagine that not every bank wants to actually do foreign exchange operations. So there will be sponsors for such currencies that always will perform the currency exchange. But as it's noted on the slide, we have only written the concept for that, but not implemented in the PoC yet. And the last part is really part of the settlement mechanism, exchanging the tokens. If you, as a customer, receive tokens of a bank you have no relation with, then these get automatically exchanged for the tokens of the bank you have a relationship with. So we did the proof of concept. I think, or we concluded it in April, I believe, and where we found that for all the use cases that we looked at and the corporates looked at, CBMT worked quite well. And we also found that it works with the 3 DLTs. And I'm really happy that it especially worked with the Ethereum network EPN. And we have found that the existing or the ideas of the process that the corporates had, we did not need any remodeling or anything to get them working with CBMT. And the rule-based or conditional transaction were, of course, the most interesting thing for the corporate clients, because they are really looking at working capital optimization stuff and automated transactions, so that the whole invoicing process can be much more automated and simply better. yeah, that's what we and our corporate clients found. So what do we do now? We had the free proof of concepts and also published a report on that, which is available on the website. And now we are looking towards getting a real money proof of concept, a real money pilot off the ground. And for that, we are speaking with the supervisors and the other authorities on what they want to see from such a pilot, what kinds of reporting they need, and what safeguards need to be in place to let such real money transactions happen. And hopefully we can do that in Q1 or Q2 of 2025. That's basically it. Basically what we are doing now and up until the end of the year, preparing the pilot, collecting the use cases, and collecting the feedback on and requirements of the authorities so that we can actually do real money transactions in under a pilot really. And that's all I have to say. So now maybe there are some questions.
Yeah, thank you so much, Max and Roberto. Really insightful, especially when you see the use cases. We do have some questions, some for R3, some for EPN, and some for comparing both. So let's start with R3. So the first one, it's about cross-issuer tokens transfer. So how does the R3 implementation manage cross-issuer token transfers, considering Corda, model, and private permission and ledger?
Yeah, so the R3 model took they leveraged their CBDC issuance model for the token issuance. In terms of the actual transfer and orchestration of the transfer, I'd have to come back to you on that. Actually, I don't have the full details of the technical transfer mechanism. But if you reach out, I can find out for you.
Sure. At the end, we will let the people know your contacts. So if they have any other questions, you can reach out to you. So the next one is about, it's a kind of related with privacy and compliance requirements. So how did the R3 setup facilitate privacy and compliance requirements, given its transaction data sharing approach?
So as you know, that one of the key USPs of Corda is the ability to hide transactions, so only those who are transacting with each other can see the transactions, fully private permissioned, with that transaction privacy in place. I'm not sure what else to add on that. And I think maybe if you want to chime in on the EPN equivalence or the equivalent thing on EPN, Max.
I think, on EPN, we were kind of on the opposite end of the spectrum, because on the EPN, everything was visible to everybody. I think compliance-wise, both systems are equivalent there, because all parties have been KYC'd, identified before doing a single transaction. So that part, is I think equivalent between the two. And this was actually a surprising finding for the EPN that for a certain set of transactions, or for a certain set of business or subset of business, our corporate clients were actually fine with everybody seeing the transactions on the EPN, because that the business there was more or less public anyway. So the added transparency of seeing how much chemicals are moved or whatever was of no concern. I mean, this obviously does not transfer to every transaction. There are certainly transactions that need more privacy, but this actually surprised me, but it was a happy surprise. You wanted to add something? No. Okay.
Okay. So Max, you mentioned the 1155. So there is a question. Were there any limitations to 1155 use in representing CBMT, especially in high volume transactional environments?
We didn't encounter any special limitations. I mean, I explained the one hack we did with the token ID of mixing both the currency and the bank into the same token ID instead of keeping it neatly separate. But other than that, we didn't encounter any specific restrictions that I would now attribute to the 1155. That's, I mean, if you are thinking about count of transactions, throughput, we didn't do massive load testing, but the numbers we reached were okay for the corporate clients. So I mean, the great advantage of EPN is that it's not proof of work based, so we can scale on that end. So in the end, I don't have to report any major drawbacks that we encountered by using the ERC 1155 there.
Okay. Yeah, we do have a similar one for R3. So if the tests review any specific interoperability challenges, particularly for integrating CBMT with other DLT networks, any challenges?
I mean, we didn't go into deep scope, I would say, on in terms of those kind of things. I mean, I mean, interoperability with Corda. There are examples now of Corda opening up to other networks, for example, with Adhara systems and Finality, for example, there's interoperability. So I think in the future that doesn't pose a problem, I would say, necessarily.
Okay.
And certainly within the scope of the POC, it was really about demonstrating the use cases as opposed to technical integration. I mean, we did look into it at a relatively superficial level, and actually as part of the pilot, we want to look more deeply into integration challenges. I mean, our experience at Commerzbank with integration of Corda is something that we're doing with integrating into our legacy systems with one of our products that we're building. So that answers the question.
Yeah, and picking up your cue, we are looking at doing our pilot on the EPN with the Ethereum virtual machine, and one key part there will be actually connecting the happenings on the DLT and mirroring them into our core banking systems. So at least the interoperability part with traditional systems will be tested there, but we are not really looking at doing DLT bridges within the framework of CBMT. There are a lot of approaches like wrapping tokens, etc., to make them available on other DLTs, which is something that's maybe there in the future, but currently we expect that the corporates do their business on a single DLT, and on that DLT we also bring the commercial bank money token, so that we don't need to cross any systems to model the business. So really, doing cross DLT transactions or something like that is certainly possible, but it's not the primary use case that we see.
Okay. So you showed the timeline, and you are in this talk with the regulations, and so we have a question. Were there any particular regulatory insights gained from testing CBMT on these different platforms that will influence future developments for both platforms?
Particular insights? Well, nothing particularly new, except maybe that this small move, which is actually a big step of moving part of the accounts system of the core banking system onto a DLT, which is just a new technical form, but which is also the core thing of CBMT. I expected more specifics of the new DLT regulations to be in the way there, but so far, we are mostly or largely within the boundaries of existing deposit regulation. So that part where I imagined more, not problems, but where I expected more work to find out what is actually needed, etc. That part was so far, easier in the sense that we simply are within existing regulation and not in this strange new world. But I'm not sure if that actually counts as a revealing thing. So I don't know, Roberto, do you have any?
Yeah, not much to add there. I would just say from there's two aspects: there's monetary aspects and then there's operational aspects. So from a monetary soundness point of view, it is our opinion that it's nothing new effectively. So it's just, as we've said a few times, a technical extension of an existing form of money. And now it's about demonstrating the operational soundness of CBMT. So, and we will use the pilot as a vehicle to demonstrate that to the supervisory authorities.
Okay, I think we do have time for more one. So you mentioned, Max, some future improvements in the next steps. So based on the PoCs, what future improvements are necessary for CBMT to better support complex use cases and scale?
I think the main, besides actually connecting and integrating with our backend services, the production environment there, I think we will also spend some time on tooling surrounding this. You have seen the third-party wallet Helix ID, which displays and models the different token IDs well, but for on the bank side and on the side of the technical service provider who does all the administration, it is more command line based with the JavaScript SDK that you briefly saw in my demo. So we will spend a bit more time there, making this JavaScript SDK accessible in the sense that you can actually take your operations from your business process and meaningfully integrate them with using that SDK so that the automated payments, if they are not within a smart contract on-chain, that this integration with other backends with the corporates get easier, and that the onboarding story there is easier than it is right now. I mean, obviously we have developed this together with the clients, so they already know the business concept, etc. behind it, and so they are somewhat familiar with everything, but we are looking at finding other people and getting them to join. And for somebody new to the concept, the current libraries, well, they work, but they could be more polished and make for a smoother experience there.
Okay, so we are approaching the end, and of course, I'd like to thank you, Max and Roberto, for such a super interesting discussion, and also the audience for many questions. And I'd like to ask you for give you your closing remarks.
Yeah, I think we're super excited about this project. I think we have a unique case. We have some very forward-thinking corporates who have joined us, some major industrials, and we're looking forward to maybe some cross-border collaborations with other initiatives. So we're really pushing to bring this thing alive. I mean, when I say pushing, it's really us working with our corporates. So it's the corporates that are pushing as opposed to the banks. So we're very customer focused in that way. And there's some really exciting stuff happening in industry. I mean, I came across the Camino network recently, ecosystem, which is building an ecosystem for the travel industry. Super interesting. You know, a CBMT could well fit into that network that's a nice, relatable example of a DLT based ecosystem, which you can all look into. That's super interesting. That's it for me. Max.
I don't have that much to add. I mean, yes, the Camino people are a very good example of what we are looking into, where CBMT can be added to actually make a difference. And I think the next 9 months will be super exciting anyway, connecting actually our backend systems to the DLT and seeing how the integration then gets to happen. That's interesting times there.
Yeah, indeed. Amazing. Thank you so much for your participation, and also thank you for the audience. And if you enjoy this content, please like it and share this video with your network. See you at the next episode of the DEA Tech